Insurance helps protect people from unexpected problems like car accidents or house fires. Insurance underwriters work behind the scenes to ensure policies are fair. They're like financial detectives, assessing risks and deciding how much coverage to offer. Underwriters review information to determine the risk of covering someone. Are you a safe driver? Do you live in a disaster-prone area? They also decide on insurance costs or premiums based on risk level. Underwriters are the guardians of insurance, ensuring fairness for the company and their customers. So, how do underwriters actually do their job? They have a whole toolbox of skills and tools they use every day. One of the most important is their attention to detail. Underwriters spend a lot of time reviewing applications, policy documents, and other records to make sure everything is accurate and up to date. They also use specialized software and databases to help them assess risks and calculate premiums. This might include looking at things like your driving record, credit history, or medical history, depending on the type of insurance you're applying for. But it's not just about crunching numbers. Underwriters also need to be good communicators, as they often work with insurance agents, customers, and other departments within the company. They might need to explain their decisions, answer questions about policies, or negotiate terms of coverage. And of course, underwriters need to have a strong understanding of the laws and regulations governing the insurance industry. This ensures they're always following the rules and protecting both the company and the policyholder. One of the most important things an insurance underwriter does is evaluate risk. What does that mean? It means looking at all the information about a potential policyholder and figuring out how likely they are to make a claim. For example, imagine someone is applying for car insurance. The underwriter will look at things like their age, driving history, the type of car they drive, and where they live. Someone with a history of speeding tickets and accidents is considered a higher risk than someone with a clean driving record. Underwriters use this information to decide whether or not to offer insurance and how much to charge. They want to make sure the price of the premium reflects the level of risk involved. This helps keep things fair for everyone and ensures the insurance company can afford to pay out claims when they happen. It's a bit like solving a puzzle, putting together all the pieces to get a clear picture of the potential risk. And just like with puzzles, the more experience you have, the better you get at it. The insurance industry is heavily regulated, which means there are a lot of rules and laws that underwriters need to follow. This might seem boring, but it's actually really important for making sure everything is fair and transparent for both the insurance company and the policyholder. For instance, there are laws that prevent insurance companies from discriminating against people based on certain factors like their race, religion, or gender. Underwriters need to be aware of these laws and make sure their decisions are based solely on the level of risk involved. There are also rules about the types of coverage that must be offered, the information that needs to be disclosed to policyholders, and how claims are handled. By following these rules, underwriters help maintain the integrity of the insurance industry and protect the interests of everyone involved. Think of it like a referee in a sporting event. They make sure everyone is playing by the rules so the game is fair. Finally, underwriters play a crucial role in ensuring the financial stability of insurance companies. They do this by carefully calculating premiums, the amount policyholders pay for their coverage. This involves finding a balance between covering potential losses and generating profit for the company. Underwriters use complex mathematical models and statistical analysis to determine the appropriate premium for each policy. They consider factors such as the type of coverage, the insured's risk profile, and historical data on claims. By accurately assessing risk and setting premiums accordingly, underwriters help ensure that insurance companies have enough funds to pay out claims while remaining profitable. This delicate balancing act is essential for the long-term sustainability of the insurance industry and its ability to provide financial protection to individuals and businesses. In essence, underwriters are the financial architects of the insurance world, using their expertise to create a stable and secure foundation for everyone involved. If this content was valuable, please like, comment, and subscribe. See you in our next video.